Hey, this is Neil Bawa, the mad scientist in multifamily, and you're listening to the Mailbox Money Show with Bronson Hill.
All right, welcome to the Mailbox Money Show. My name is Bronson Hill. Really excited you decided to join us today. I have an awesome guest, Keith Blackborg, who is a tax strategist, consultant, helps people to pay less in taxes, which I'm always a big fan of. So I think this topic is something you should be very interested about if you're high net worth, if you're a high earner, being able to reduce, defer, or eliminate taxes. And he has some unique strategies that I really hadn't heard before. So I wanted to have him on the show, and he's just an awesome guy. We have some mutual friends. So Keith, welcome. How are you today?
Thanks for having me, Bronson. Great to be here.
Oh, really excited to have you, man. Let's talk for a minute a little bit about your story. You have a cool story, kind of how you started doing this, and just give us a little bit of your background.
Sure. There was a guy named Robert Kiyosaki. You may have heard of him. Went to a convention back in 2010, got started in 2010. I jumped in with both feet with a local real estate group in Texas and started initially doing rentals and flips of houses. 2013, 2014, switched to active and passive investments in hotels and apartments. So my wife was managing our real estate business. I had a CPA firm focused on high net worth apartment syndicators. And 2016, 2017 rolled around. I thought the real estate market was going to crash and Hillary Clinton was going to get elected. I was wrong. But along the way, I exited out of some stuff and I missed out on a huge opportunity to continue to grow. But my wife and I just ended up spending the next few years just traveling the world, doing what you're supposed to do when you supposedly made it in real estate. And then out of that, we had our firstborn son, and apparently kids change things. And so settling back at home next to grandma, we started a financial journey, which helps people grow their wealth and mitigate their taxes.
That's awesome. I love it. Yeah, and I love that you took time to travel. I think a lot of it really comes down to lifestyle. Right? A lot of people think, hey, I want piles of money, but really what people want is they want freedom over time. They want to be able to do what they want. I quit my corporate job a couple of years ago and traveled since then to probably 8 or 10 countries. And it's just been awesome, right? To be able to have that flexibility to be able to travel when you want. Obviously with kids, it changes a little bit and hopefully they get older, you can travel a little more again. But that's awesome. Well, I know your background, you are a CPA by trade, right?
Yes.
And so that was your background. So you're a numbers guy, you're good. You worked for a big firm. And then you branched out to start this. What was the impetus to start this? Maybe you kind of got into a little bit, maybe you can kind of expand and just maybe some of the issues that you see in the marketplace that you guys work with now.
Yeah. So right now it's about helping people identify where the best opportunities are. So a lot of people initially are thinking about work optional, retirement, how do I escape? And so for my average client, usually a business owner with $3 to $20 million worth of net worth, it's about how do we package up the business for sale, maximize the sales price, minimize the tax consequences, and what are some great investment opportunities along the way? So for example, somebody might invest with you, get into some multifamily. They usually make money from the equity and the rents, and you kind of get that. I know you do. And so for us, it's also about identifying other asset classes that are good for people, that are good with the market right now. And I own some multifamily, or I've invested in some multifamily, and it's been a phenomenal part of our portfolio. But as we also branch out, like direct investments in oil and gas right now, so there's some people in our group that are now doing conversions of commercial real estate. And so that could be taking office buildings, going to apartments, self-storage, or how do you vertically integrate a community together? Some people like assisted living, maybe packing doctors, living, family living, some recreation all into these spaces. And so it's really about identifying where the greatest wealth opportunities are and either having somebody to lead that, or if you're a passive investor, if that feels like too much work, just find somebody who's got a great idea and invest with them.
Yeah, no, that's great. I think you mentioned you talked about selling a business. We have a lot of investors that really when selling a business, I think of a couple clinicians in California that sold a business for $5 million, had a big tax bill of over $2 million. And just through getting the right people involved, getting tax strategists involved early, finding about the real estate professional designation for their wives, and just figuring out ways to work around this, they were able to reduce their tax bill to, I think 125K or something. So they reduced it almost not to zero, but quite a bit. And so I think that, there's really, I can't be really overstated the idea of just team, whether you're a passive investor, which really, if somebody's selling a business, you need to have a team of people that can help you on the tax side, that are on the strategy side, that are looking at entity protection, all that. I know your group, your firm does this. You help people create plans. And that's what I loved. I think about your website, you were talking through about how you help people to, how can you leave your job in 3 years or 5 years?
Yeah.
And a lot of people think that, that are high earners, they just think this is impossible. And I know I had a call a little while ago with a physician whose net worth of $5 million, only invested in stocks. Well, a lot of times for those people, it's hard because they don't really know anything else besides making money in their business.
Yeah.
They don't know how to basically have their money generate money when they stop working. I think that's a challenge that a lot of people find. What are some things that you kind of, obviously that's what we do in our business. We do ATM machines and car washes and oil and gas and multifamily and all that stuff. But what are some things you usually advise people when it comes to like, hey, I'm brand new to this. I know I probably should do some alternative things, or what are some steps you kind of look at when making a plan for people?
So first and foremost, it's about identifying where you are and where you want to go. I've learned that retirement is a dirty word for some, which is why we talk about work optional. So having the appeal of being able to be work optional, what does that look like? Making wealth the business is a key transition that most people make. You get far enough into your career, you've got enough net worth. If you could shift your focus from making 6 to 8% on your money with a financial advisor and maybe earn 8 to 20% plus like some of our members, that's going to dramatically grow your wealth significantly more. So it's about identifying your goals, figuring out the investments that align with you, what's going to get you there, and then you can backtrack, reverse engineer the steps that you need to get there.
Yeah, absolutely. And that's, if you don't have a plan, they say if you fail to plan, then you plan to fail. And I think it's really true. If you don't know where you're going, it's like that line from Alice in Wonderland, then any road will get you there, right? If you don't know where you're going or where you want to go. And so it's really being very crystal clear on what your goals are and where you want to go. And that's where I think somebody like yourself who can really clarify that for people. And I think there's a lot of things to consider. People have kids and they've got maybe multiple businesses or multiple, family members or people involved. And so figuring all that out is really important. I wanted to get into a little bit of the strategy that you mentioned to me when we had our last call.
Sure.
You talked about, and I know you have, for those listening, you won't be able to see this, but on YouTube, we'll be able to see it. But I know you have a strategy that's like, it's like a rollover strategy that I hadn't heard of. Can you talk about kind of what that means, from a retirement account and what the benefits are of this strategy?
Yeah, I love to marry the wealth and the tax strategy together. So your members have probably heard about things like opportunity zone funds, and there's other things out there. So one of my favorite strategies that few passive investors have ever done is called discounted rollovers. So this is especially useful for anybody who has a large retirement account and wants to move that money from a traditional to a Roth account at a significant discount. Typically, most people, once they get to about 50 plus, it doesn't make sense to do the rollover. But with the discounted rollover, when you can get 20 to 80% off, it makes a huge difference. So let me run through an example. Let's say people put $100,000 into one of your multifamily apartment complexes. They 6 months in, you've kicked out some non-performing tenants. You've intentionally done some rehab. You're upgrading the property, but as a result of that, the net operating income has dropped as planned. But this is also when the project is at the greatest risk. Something could go wrong. You've dropped occupancy. You have less income coming in. And so what we do is we go out and get a valuation, and from an independent third party that says, hey, based on the fact that the financials are down, maybe interest rates are up, cap rates may have changed, you got some other factors that go into that independent valuation comes back and says, hey, that $100,000 that you put in is temporarily worth just $50,000. And so we do a rollover from a traditional retirement account to a Roth retirement account at a 50% valuation, meaning you invested 100, you're paying taxes on 50 on the asset rollover. And then because they invested with you, a few years later, it pops up in value to being worth $200,000, but all within the Roth account, and they're never taxed again.
Yeah, that makes a lot of sense the way you explained it. And again, there's a visual. If you're listening to this, you can go to YouTube and watch it. But basically, yeah, we're seeing this. This happens in deals where you have a planned vacancy, or you have that you're doing all this value, the income drops on a property. And for some people that aren't familiar with multifamily, it can be a little alarming. Like, oh my gosh, the value's dropped, but it's planned so that you can do those renovations, you can get the income up, and you can increase the occupancy. And so I think this is really valuable. And actually, I think there's also a play here as valuations have dropped a little bit. Just overall, we've seen valuations in a lot of markets, not every market, but in some markets drop, that there's a way to do this. So does this make sense to do with a 100K in a traditional account, or is it more from a cost perspective and setting this up? Does it make more sense to do it if it's a higher dollar amount? Like, what's kind of the minimum amount you see this strategy kind of making sense, Keith?
So depending on who does the valuation, you might spend maybe $2,000 on the valuation. So it's $2,000, whether or not it's 50,000, 100,000, or 500,000. So it likely makes sense. Probably 50,000 is probably the minimum floor you'd want to do this on. But especially if you get some buddies together that you're all investing in the same deal, or as a syndicator, if this is a value add you want to provide to your investors, this is a huge strategy, especially from anybody who's got these large 401k accounts that doesn't want to pay taxes on it. You move it over. This is a game changer. You never pay taxes on what it could end up being $200,000 within a Roth account. A lot of my clients come to me, they've got $1 million or more that they've accumulated over a lifetime in a retirement account. And to have that all be taxed for the rest of your life, that's potentially 7 figures worth of tax savings over the course of your lifetime.
Right. No, that can be very substantial. How does, so there's a tax that's inside of a retirement account, the unrelated business income tax, or UBIT. Does that apply? It would apply in this case, right? So if somebody had it, it depends on the type of account they have.
If there's debt financing for an IRA, yes. But my favorite way to avoid that, just to avoid all the headache with UBIT and UDFI on these, is go do it in a solo 401k. So if you're an employee, go start a business, earn $1 worth of income, file your Schedule C. My favorite provider for this is solo401k.com. It's like a $500 setup fee, $100 a year thereafter, and you're set. You avoid unrelated debt financed income, which can cost you tens of thousands of dollars if you do a lot of these. And so that's simple answer is just sidestep all of it and do it in a 401k.
Yeah, that's a great strategy. I mean, there's strategies with the Roth IRA. There's a guy, Peter Thiel, who has like $1 billion or something in a Roth IRA or something. I think they're trying to figure out how to tax somebody. But, once you have it in a Roth, you really, unless laws change, you're not really going to pay any taxes on that, which is an incredible strategy. A lot of people know it's there. I've got, maybe 15K in a Roth, or I've got some money in a Roth. It's hard. Obviously, when you start making more money, it's harder to put money in a Roth sometimes, or you get, there's limits on some of that as well. What are some of the strategies that you see, particularly for business owners? Like, what are some of the things that, what kind of solve some challenges that a lot of business owners face?
So if we're looking at getting money into a 401k, to be clear, you can do a traditional IRA or a Roth IRA, or you can do a traditional 401k or Roth 401k. So I prefer to do it all within a 401k if that's an option. Most people who are business owners that have employees think that they can't invest their retirement accounts in non-traditional assets like real estate. There are people out there that will custom write these 401k plans that actually allow it, a non-safe harbor plan that allow you to do that. So just because your traditional Fidelity tells you it's not possible, it just means that they can't help you. There are others out there. You may have heard like Mega Roth 401ks. There are other ways to get 72K this year into a retirement plan. There are other options out there. And so just go Google Mega Roth 401k. These are part of what we help people set up, is identify great syndicators like you to help put our members into. And then we walk alongside people on the wealth and the tax strategy that fits in with the investments that people are already thinking about.
Yeah. It's and what do you say for people that haven't done alternative assets? Maybe they've only done traditional stuff. What are ways you've seen people successfully get started into it? Is it just putting a small amount of money in one deal and kind of watching it and see it perform, and then they feel more comfortable with it? Or what are some ways a lot of people we've seen is, they've never invested, they've kind of kicked a lot of tires, but they just haven't
Yeah.
taken the action. Like, how do you get people comfortable with getting involved in alternative assets?
So first and foremost, you gotta start somewhere, and starting small. Like with my typical client avatars, they come into financial journey, they've got some money, they put it to work, and they learn that the deals are real, the people are real, etc. The next thing is being in community. So I know you've got some events, meeting other people like that. We do events as well. Get people in talking to each other, where people realize that the other people are real, and then how people do due diligence together. We have our members, we have somebody come in, share a deal, and then our members will then talk amongst themselves on whatever it is. So if we're doing an oil and gas deal, we've got members who are oil and gas engineers who are completely independent of whatever deal is, and they'll say what they like or don't like. Same thing with multifamily deals. Or you've got, when you go to like an investor meetup, ask your other peers what their favorite deals are, who their favorite providers are, and you can start to piece together what the best investment options are for you. If you hear 3 to 5 trusted people all saying that Bronson's the guy to go invest with Bronson.
Yeah. Yeah. It's amazing how word of mouth is so huge in this world. I mean, I've invested in things, and just from, hey, this person's been doing this and I trust them. They've been doing this for 10 years with this operator. It's like, well, that's a pretty good recommend, right? So it's amazing. Now, sometimes that can also be like, you do want to do your own diligence and make sure things make sense. And just because, there are a lot of, there are some people out there that are not doing things equitable, the right way or things like that. And so it's just good to, also see if it makes sense for you as well. Let's talk for a minute about entity protection. Do you guys work with entity protection? What kind of, why is that an important conversation for somebody who's a high net worth person?
Yeah. So matching the right vehicle, right investment vehicle to the terrain is important. So we went through like a 1-page wealth plan on a recent event. And part of that format is, what's your goals? What's your portfolio allocation? What are investments that fit your goals and portfolio allocation? And then what investment entities, right? So we look at, could it be anything from retirement accounts to trust to LLCs, to how do you want those LLCs taxed? Are they taxed as partnership, S corps? So that, with what I just said, can feel overwhelming. It's about simplifying it and doing what's right for you. So I like, when people first get in, we try and give you just a couple options. And as you grow and you get more sophisticated, as your investments get more sophisticated, it's important to realize that the size and sophistication of your legal and tax structure matches the size and sophistication of your business and wealth. And so we grow into that. You can't just have a one-time seminar that's going to tell you everything you know. It's something you learn over time.
Yeah. Yeah. And that's why you said one size fit all. It's just amazing how people are very different, the things that are important to them and the things they're protecting, and maybe their spouse works, they don't work, they have kids, they don't have kids, they've got an inheritance, they don't, they've got a tax issue, they don't have a tax issue. It's all different depending on what their needs are. And that must be pretty fun about this job for you as well, as you get to kind of create that individually for people.
I love that. It's like a game for me. I actually like talking wealth and taxes. That's why I got back into this after traveling the world. It's actually fun to do tax stuff that people think is weird. I like studying tax code, but I know that's not everybody.
It's funny. I think when you're into, tax code is not the most interesting thing to me, but when I talk about finance and returns and, the different assets and reading documents, and I love that stuff. It's awesome. But some people are like, man, I'd rather get a root canal or something. But it's just interesting how we're geared. We're geared differently. And a lot of they'll see that with a couple, right? Maybe one of the two is really interested in it. The other one's they're almost trying to convince them, hey, you should be interested, or at least support me as I do this. But, it's just interesting that knowledge really is power. And I see so many people work so hard for money only to get it, lose it in taxes or lose it in other, just not planning well, or maybe they get into deals that they really didn't vet well or things like that. And it's really sad and it's really unfortunate. What's one thing that you think most people should know that they don't know? Or what's one thing kind of when you first start working with someone that you're like, oh, this is something that's kind of 101 that most people don't know?
You know what? Probably the biggest thing I can think of is never making wealth the priority. So if you think of doctors, lawyers, any high income earner, they've learned a technical skill set and they've gotten very good at that. They know how to make money. They know that skill set. If, however, past age 45, 50, they're probably worth at least a couple $1,000,000 if they've been putting away and doing anything with that. And if they've just put a little time and effort to educate themselves, to learn what's a possibility out there, whether it's investing with you, going to an event, just learning, they start to see what's possible. And there's a corner people need to turn in their business, their career, where managing their wealth should at least be a part-time thing, that they at least put in a few hours a month. If you're going to spend 50 hours, 50 weeks a year earning it, you might as well spend at least a couple weeks a year saving it, whether it's your tax strategy, learning how to grow wealth. With just a little effort, you can get significantly greater results. And that starts by investing yourself and meeting other people that are on a similar journey.
Yeah, and that's really interesting too. I talk to people. I do, I have a book coming out that's talking about, passive investing on alternative assets. And if you change, like you're talking about, if you're changing a 6 to 8%, stock market return, which really typically usually is not that much because of fees and other things that come out of it and volatility. But you go from that to a 15% return per year. It's like your returns go crazy. It's like unbelievable. Yeah. I mean, the most powerful force in the universe, according to Einstein, is compound interest, right? Whether he said that or not, it's attributed to him. But it's so true. It's just, if you can create a good plan and you can't go back 10 or 20 years. I wish I had invested in this. I wish I'd done this, but you can do it now. And I think hopefully this is a wake up call for anybody who's watching or listening, is that, hey, you can take action, you can take steps, you can reach out to, a group like yours and really, try to learn more about this. I was going to ask you, Keith, what are some things like you're seeing? Obviously, there's a lot of people are seeing fear in the market. They're seeing interest rates being higher, particularly, in real estate or other sorts of investments. A lot of people, Bloomberg had an article a few months ago that said that Americans are sitting on a record amount of cash just on the sidelines. Typically, it's about 4 to 5 times the amount that's ever been before, about something like $5 trillion in bank accounts and savings accounts and brokerage accounts. What do you think? Like, what are you investing in personally? Are you more kind of like a wait until there's some event, or are you pretty fully invested now? I'd love to know a little bit about your personal investing.
Sure. I think the only thing that's certain in this market is uncertainty.
Yeah.
And so I've made enough mistakes trying to predict the market that I will still make educated guesses, but I'm not going to sit all on the sidelines in anticipation of that. So right now I probably have maybe 60 to 70% of my portfolio spread between some multifamily, some hotels, some commercial real estate, some energy, some startups. But I'm intentionally in about 30% of my portfolio in assets with liquidity. So I don't know, the stock market's going to go up and down. It's possibly at a high, but I thought it was going to fall right after COVID, and I was wrong. It rallied. So I intentionally keep part of my assets in a few stocks. I intentionally keep stuff in some crypto. I know things are going to go all over the place, but I'm trying to have a good mix between different asset classes that are strong. And so every time I have a private investment pay off, I look at where the next place is. Where do I think things are growing? And I'll place it in that. But overall, I'm about 30% liquid so that I can pivot. And when there are opportunities, when you've got a great deal coming up, I can have cash available for the deals that I want to be in.
Yeah, I think that's a good strategy. Yeah, I'm about 95% invested, but I have some cash. But everybody's different. Everybody's different from what they need and what they want, and there will be good opportunities out there. And I have really smart people I know that are like all in cash or almost all in cash. Other ones that are almost fully invested. And it's we'll look back and say, oh, that was really the right approach, but we don't know. Obviously, we're all going through this. We don't have the Grace sports almanac like from Back to the Future where the guy can predict, exactly what's going to happen. But yeah, I think that's really interesting. Well, Keith, I really appreciate you. I know you also have a faith background, which I appreciate as well. So you do things because you really want to help people and serve people, in your bio, as it was on your website there as well. Appreciate the value you bring to the marketplace and individuals, and just want to encourage people to reach out to you. But what's a good way for people to connect with you and hear about what you're doing?
Yeah, my website, financialjourney.life, is where you can learn about me, what we do, and connect with us. We've got our next big passive investor event. You can go to passiveinvestorevent.com. That's a Dallas area event for 400 people in September 8th and 9th. And I know you guys have some events as well.
Yeah, we have something in October, the Advanced Real Estate Investing Summit in Los Angeles. Looking forward to that. But I think your event is awesome, and encourage everybody to reach out to Keith. And thanks again for being here, brother.
Thank you, Bronson. I appreciate it.
All right, so Keith Blackborg, great guy. I can't say enough about tax strategy, getting an idea of where you want to go, getting clear on your goals, especially if you are a business owner or if you're a high earner. It's so important to figure out where you want to go. Even if you don't want to leave your job or sell your business right now, the ability to be able to do that is really powerful. Just in your mind to know that, hey, I could walk away from all this and I'd be just fine. I remember when that happened for me, I realized like, wow, I have all my living expenses covered through passive investing and I don't have to work anymore, but I'm choosing to work for a period of time and then I can do it. Or even now I can work as I want to work. I can help others to grow their passive wealth and be a part of something that I'm really passionate about and have freedom over my time, which I love. So I hope for you have a plan, you're creating a plan. Reach out to Keith's group or a group like his to reach out and to be able to connect, help with a plan for taxes, tax reduction or entity protection or other things when it comes to selling a business or things like that. And so I just think it's really powerful who you have in your network that can help you on that journey. So this show, the Mailbox Money Show, is dedicated to helping you grow passive wealth that you don't work for. So it's not, owning rental houses or managing a stock portfolio. It's stuff where the money comes to you, and where the money doesn't, you don't just simply do it for the money, but you have a goal in mind. You have something in mind, maybe a legacy with your family or with a cause in the world. For me, it's really ending modern day human slavery in the world today, that there's actually 20 to 40 million human slaves today, more than we've ever had in the history of the world. It's kind of really shocking and hard to believe, but it's true. And so that's a cause I really believe in. So hopefully you found a cause you believe in and you are really going for it, and you have a plan on how you're going to become financially free if you're not, or, as you sell a business or as you quit a job, you're able to generate passive wealth. So thanks for taking the time to educate yourself. We'll see you on the next episode of the Mailbox Money Show.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.